BingX, a trusted global crypto exchange. Trade spot, futures, or copy top traders easily. Sign up via the link or referral code to get 30 USDT instantly, plus up to 1,500 USDT in bonuses for verification, deposit, and trading.
The United States and China have reportedly finalized a landmark deal concerning the sale of TikTok's U.S. operations. Treasury Secretary Scott Bessent announced on Sunday that the intricate details of this transfer to new ownership have been ironed out, marking a significant development in the ongoing digital sovereignty discussions between the two global powers. Speaking on CBS's Face the Nation, Bessent confirmed the agreement, stating, "We reached a final deal on TikTok." He elaborated, referencing a meeting in Madrid where the agreement was initially forged, and expressed confidence that as of Sunday, all the details are ironed out. This meticulously crafted agreement is now poised for formalization by the leaders of both nations. The specifics of this groundbreaking transaction remain undisclosed, but sources indicate it is embedded within a broader framework of potential trade agreements that President Trump and Chinese President Xi Jinping are expected to discuss during an upcoming summit. This pivotal meeting, scheduled for Thursday in Korea, will be a critical juncture for solidifying the terms of the TikTok divestiture. Bessent's pronouncements follow President Trump's executive order issued on September 25, which paved the way for a U.S.-based ownership structure with a substantial stake held by American investors. The Treasury Secretary clarified his role, emphasizing that his mandate was to secure China's approval for the transaction, a goal he believes has been successfully achieved over the preceding 2 days. He explicitly stated, "I'm not part of the commercial side of the transaction," underscoring his focus on the diplomatic and regulatory aspects of the deal. This agreement arrives after a period of heightened scrutiny and political maneuvering surrounding the popular social media platform. In 2020, during his first term, President Trump had threatened to ban TikTok, citing concerns over its ties to China and its handling of the COVID-19 pandemic. Congress later passed legislation mandating a sale or ban, which was signed into law by President Joe Biden in April 2024. The initial deadline for divestiture was set for January 20, 2025, but was extended multiple times as the administration sought a viable solution for transferring ownership. The estimated valuation of this complex deal is approximately $14 billion. Under the proposed terms, a consortium of U.S. and international investors is anticipated to hold around 65% of the company, while ByteDance, the current Chinese owner, and its associated investors would retain less than a 20% stake. President Trump's executive order further stipulates that oversight of TikTok's influential algorithm will be transferred to the new investors, along with control over the majority of the board of directors, securing 6 out of 7 seats. The backdrop to these developments is President Trump's extensive diplomatic tour of Asia. He arrived in Malaysia on Sunday for the Association of Southeast Asian Nations Summit. Embarking on a 5-day journey across the continent, the highly anticipated face-to-face encounter with President Xi is slated for Thursday. Beyond the TikTok sale, the agenda for this crucial meeting is expected to encompass a range of critical bilateral issues. Discussions are anticipated to focus on increasing U.S. agricultural exports, particularly soybeans, addressing the persistent trade imbalance between the two nations, and confronting the ongoing fentanyl crisis in the United States. The fentanyl issue, in particular, has been a significant point of contention, previously serving as the justification for President Trump's imposition of 20% tariffs on a broad spectrum of Chinese imports. The evolving dynamics of this digital and economic relationship continue to capture global attention.